Okay, so what we're doing here now is an income tax computation, and you'll find the question in the usual places. Before we actually take to doing the final computation, we actually have to work out some of the workings first. So first we're going to look at Peter's BIK, benefit in kind for the company car. So the original manufacturer's value is €39,000. Peter travels approximately 37,000, just over 37,000 kilometers, which means that the applicable BIK rate is 18%. 18% of the cost of the vehicle, 39,000, will be calculated, which means the annual BIK charge is 7,020. However, in this case, the car was only driven and owned by the business from October to December in that year. So the BIK applicable, therefore, is going to be reduced to just 3 months worth of BIK, which is €1,755. Next, we're going to look at Maria's business income. So Maria has an engineering business, and her profits after she did her calculation for the year worked out at €73,000. She's carried forward a loss from the previous year of €13,250, so she gets to offset that against her profits for the year, giving her net profits of €59,750. We now have to consider Maria's capital allowance position. There was a disposal and an addition of a motor vehicle during the year, and so that's where we're going to start in this area. And so first thing we have is the disposal of the Audi, and we need to look at the capital allowances that were applicable to that. It was a category D car, so the allowances were restricted to €12,000. The applicable capital allowance on an annual basis, therefore, is going to be that 12,000 multiplied by 12.5%. And that works out at €1,500. In this case, the charge is going to be over a number of years, and as we looked at it, we saw that the car was purchased in 2013 and then was held for 14, 15, 16 and 17, and that means that there's going to be 5 years of charges in this case. So that means that our final calculation for how much the charge was is going to be €1,500 multiplied by 5, giving €7,500. So the written down value for this car is going to be 12,000 minus the 7,500, which gives us €4,500. Now we need to look at the trade-in value for capital allowance purposes, and so that will be a pro rata calculated figure as if we actually paid €12,000 for the Audi originally, rather than the actual cost back in 2013, which was €37,000. We received a trade-in value of €20,000, which means that our situation was that we retained value of 20/37ths of the total amount of the vehicle, and so we're basically going to divide the 12,000 allowable by 20,000 and multiply it by 37,000, which means that we have a figure of 6,486. As we've already calculated the fact that we have written it down to €4,500 on a tax basis, the balancing charge that's going to apply in this case, therefore, is 1,986. That will be restricted to 80% as we had 80% business use on our capital allowances, which means we're actually going to subtract 1,589 from our actual capital allowances. So the capital allowances are on the Toyota, the new hybrid car. They are restricted to 24,000, which is better than the last car. And with 80% of that being for business use purposes, the actual total capital allowance that we will get on this vehicle is 80% of 24,000, which is 18,200. The charge for the year, therefore, is 12.5% of the 18,200, which works out at €2,400. We now take that balancing charge that we calculated a couple of minutes ago, and we subtract that from our charge for the year that we just calculated, which means the net amount of capital allowance we're going to get this year is going to be €811. That €811 will slot in here as the capital allowance, and then when we actually subtract that, we end up with Maria's case 1 income of €58,939. So now we've done all the adjustments and we're in a position to do the final calculation of the tax for each of these individuals for 2018. So Maria has case 2 income of 58,939 and her €13,000 pension contribution is restricted to 11,788. Her case 4 income is €1,400. Her lottery win is exempt, and so her final income is €48,551. Peter's Schedule E income is a salary of €58,000. He also has benefit in kind that we worked out earlier on of €1,755. The voucher is more than €500 and therefore it's taxable at its full amount. And the canteen meals are exempt, therefore he doesn't have to pay anything on those. He also has the German rental income, which is 6,200. And finally, dividends that totaled 43,000 when they were paid into the account, but they have to be grossed up. A gross dividend of €5,375. This means that Peter's taxable income is €72,330. So based on these calculations, we can work out now what the couple's taxable income is. So for Maria, that was 48,551. For Peter, it's 72,330, meaning the total income is 120,881. The taxation now is going to be based on first the married band 43,550 at 20%, so tax gross of 8,710. The additional band of 25,550 also at 20% to give taxation of 5,110. Deposit interest retention tax at 37%, giving a tax of €518. And the balance of the taxable income, which is 50,381 at 40%, which gives you 20,153. Add the tax liabilities up and you get €34,495. So now we need to take a look at the tax credits that are applicable. So the tax credits come in two forms. They come in non-refundable tax credits and in refundable tax credits. So the first non-refundable credit is the married credit, and that's 3300. So one of the spouses, namely Peter, is in employment, and so he qualifies for the PAYE credit. Maria is self-employed, so she gets the earned income credit of €1,150. They've already paid deposit interest retention tax of €518. The VHI credit is deducted at source, and the net medical expenses, i.e. the gross 2,300 minus the 1,200 claim back, that's allowable at 20%, so the credit is €436. Routine dental work doesn't qualify for anything, and the optical, which wasn't routine, you can get again at 20%. So the 1,300 that was paid multiplied by the 20% gives you €260 with a total non-refundable tax credit of 7,314. The refundable tax credits are also amounts that are charged against income, but if there's an excess, they can actually be claimed back. So the first one here is PAYE paid of 13,500. That's allowable as a credit. The dividend withholding tax, which was already paid, of 1,075. So the couple have a total of €14,575 in refundable tax credits. So the tax payable gross that we calculated earlier, €34,491. The tax credit non-refundable was 7,314. The refundable tax credit totaled 14,575. So the final payment that's due for tax from the couple is €12,602.